Hey, how's it going? Welcome to Dapper Dividends. Don't you look good? Nice to see you again. Thanks for stopping by. This channel is now 1 year old, and we're into the second leg of the two legs that this channel was built on. Two legs is to put $50 into Stash Worthy Bonds and Acorns, and then put $20 a week and do that for 2 years, and to see which would come out on top. So we're doing it for 2 years because we're going to take a family European vacation at the end of, or in the summer, of 2022. And I wanted to see what this money would turn into and share the journey with you. And this has developed into so much more because, you know, I'm only human, I'm evolving, I'm learning, I'm pivoting just like everybody else should be. And it was really confining to try and do this once a week. And as a dividend growth investor, I just wanted to talk about so much more. I'm still finding my way, but I'm so happy you're here and spending just a little bit of your time with me, which I hope to provide you a very good return on your investment of the time that you've invested by watching this channel and spending time with me. So Stash is currently at $389.71, which is pretty crazy to think that. Look at the power of dollar cost averaging and consistency, because as I always like to say, the habit is more important than the money, because without the habit, there most likely would not be any money. So just starting with $50, $5 a week, I'm already almost at $390 inside of Stash. So I have had an almost 60% return on Stash. One thing I'd like to say, as I always tell you, if you look at any history of the market chart, it has an upward bias, an upward and to the right. Yes, there's going to be pullbacks, crashes, and corrections and bear markets, but they always recover. It always has recovered. It always will recover. So I did hand select these three companies to make a mini ETF of my own. I picked Procter & Gamble as they are a consumer staple. They are the products that people need and use every day of their lives the whole year around. I picked Johnson & Johnson to give exposure to the healthcare, the biopharma sector, and they are almost in the vein of a Procter & Gamble. They do have many products that we also do use. And then lastly, I picked the tech company in Apple, which I think is one of the best, but their dividend is low, the yield is low, but I did pick them for the growth that they will give the portfolio. And no surprise that Apple has given a 32% return, while Johnson & Johnson only 13% and Procter & Gamble 7%. Now, the capital appreciation is small on Procter & Gamble, but I do like to view them as a bond proxy company because they are so big that they are not going to give you the crazy wild growth inside of the space that they're in, inside of that sector, like an Apple would. Reviewing the March activity, you can see that I purchased $5 of Johnson & Johnson on March 4th, and then I did receive 74 cents of a dividend, which did drip right back into Johnson & Johnson. I love to see that drip go in. Now, one thing to keep aware of, that you do get charged $1 a month for using Stash for their platform. Just keep that in mind. They charge you for the whole year. It's not a monthly fee. So there I did get charged $12 on the anniversary of opening the Stash account. Bought more Apple on March 11th, Procter & Gamble on March 18th, Apple on March 25th, and then this was today. I bought more Johnson & Johnson. Yes, it's April 1st, but close enough. We're going to include it. Stash is very beginner user friendly. They have a lot of themed ETFs and a lot of advice. So for that $1 a month, they do provide you a lot of resources, which I'm not going to get into in this video, but Stash is just very nice for beginners to give you that little bit of a helping hand. Here we are inside of Worthy Bonds. Now, I did do a Worthy Bonds explained video that you can check out that I put a good amount of time and effort into. So if you want to be more familiar with how Worthy Bonds operates, I would strongly suggest checking that video out. 3 iterations. There's Worthy Pure Capital 1, Worthy Pure Capital 2, and Worthy Community Bonds. Worthy Pure Capital 1, there is only 5 bonds in, which I did get in on the tail end of, which has $52.71. Worthy Pure Capital 2 has $166.26 on 16 bonds. And Worthy Community Bonds is currently holding 10 bonds at a value of $101.26. Just to show you how the interest works, we'll go to Worthy Pair Capital 2, click on interest reports, and we do see when you break it down to the daily tab that you do get paid interest on those bonds daily. But the only drawback here is that inside of Worthy Community Bonds, they have sold out. So all of their iterations are for $50 million worth of bonds. And when they sell those out, they have to open up another one. So it's going to be some time. Currently, as of right now, I can't even buy any more bonds inside of Worthy Bonds. So this is really going to throw a monkey wrench into the competition here. But the one thing I want you to know about bonds is that they are not a solid investment growth vehicle, meaning that they're not going to have explosive growth. What they're there for is to give you a somewhat reliable and dependable fixed return of your capital, of your money to you. They're less risky. They do have risk, but when the market has wild up and down fluctuations, bonds are just going to be keeping on paying you your fixed interest rate, which is what Worthy Bonds is doing. And last is Acorns. Inside of Acorns, we see it's at $430.34, which this has been surprising, but not surprising, as I'll get to in a minute and explain to you exactly why. I have made $88.59, which is good for a 26.63% gain on my money in a year, which is crazy. Imagine if somebody said, give me some money and in 1 year, I'll give you a 26% return on your money. So as we look at the portfolio, you see that I did pick the aggressive portfolio, which is good for young people that want the most amount of risk and exposure to equities, which they did put the bulk, as you can see, 55% is in the VOO, Vanguard Total Stock Market ETF, which you see here, the VOO has gone up 59% in a year. And let's exactly see why it has gone that much. You click on the prospectus. If we go to the annual report, we'll just expand that. So the prospectus is 40 pages, and we see that out of the fund allocation as of December 31st, 2020, the biggest is information technology with 27.6%. And what has been driving the market? Information technology. And when we look at the information technology, look at these companies we have the most exposure to: Apple, Microsoft, Visa, the companies that have been driving the market. And it is no surprise that this ETF has just done so well. As we see a rotation out of growth into value stocks, there is a chance that there's a pullback on some of the big tech names that they do pull back. And if they do pull back, ETFs like the VOO will have more of a substantial pullback. One last thing to point out before we leave Acorns here is that you still do receive dividends. Check that out. I would be remiss as a Dapper Dividends channel if I didn't point out that I received yesterday, March 31st, 80 cents, 11 cents, and 5 cents of dividends. Even though you hold an ETF, you do pay a small expense ratio to the fund manager, but those companies, they're still investing in them. Your money is still being exposed, and when they pay a dividend, you get a super small sliver back to you. So I am still receiving and reinvesting those dividends. This is my little SWA bar chart that I made to show all of you fine folks who are playing along at home. Stash is obviously the purple, Worthy Bonds is the orange, and Acorns is the green. And for quite some time, the Stash account was outpacing everything until around November of 2020 is when the Acorns account really picked up and is by far head and shoulders in the lead right now today. So that's it. That's where we are. I'm really surprised that Acorns has just started blowing the other two out of the water. It's going to be a little bit of an unfair competition here because Worthy Bonds, I'm not able to buy any more bonds, so I'm just going to be receiving the 5% interest. I hope you've enjoyed this. If I've helped you out at all, please help me out with a like and subscribe. I really appreciate it. And follow me on Twitter at RustyRam78. Check me out as always on Instagram at DapperDividends, where I've been sharing my NFT art. That's right, yours truly is an NFT artist. My newest piece is called Tyler's Calling, from one of my favorite movies, Fight Club. Don't keep Tyler waiting. Expertise comes from the community. That's you. Yeah, you right there. Please leave a comment in the comments below because you know where the comments go. We would like to talk to you, and I will talk to you in the next video.